everybody in this group and in general group, everybody is going to pass this exam and the other courses. So before we proceed, I want to share us the standard in auditing that we used to make reference to. So here is it. I'm going to send it to the group chat after the class. So this is the standard we have from ISA 200. We have from ISA 200 to ISA 7 to ISA 700 and something plus to ISA 720. This is the recognized one for now. We still have one or some that are still developing, but this is the recognized ISA that we are using. Now I'm going to send it to the group chat. So please, for the sake of this class, let us quickly start something. The tips for this class is very, very important for us to know. So majorly, if you see 90% of students that go to exam and fail, it means that those 90 people or 90%, as the case may be, they did not follow the normal instruction that they're supposed to follow. That is why they failed the paper. Then secondly, here in professional class, they did not care about our professional skills, what we can respond to. Maybe they ask us what is audit report, for example. We're able to give them a substantive definition of audit report. But here in professional, they want us to say everything we know about audit report from the beginning to the end. Everything we know, from the uses of auditor's report or audit report, as the case may be, how it you can communicate it to the shareholder or the people in charge of the governance. So they are expecting us to say everything as if we are in that situation as auditor that need to provide the auditor's reports. At that moment, what can you do? That is the essence of this class. So what we want to write as regards to the direct meaning of everything they'll be asking us in the exam might not be useful here. If we have to go by that, it means that we are not following the normal procedure, because it's just like you have 3 legs to finish something, so you just follow 1 leg. The other 2 that you left untouched will definitely affect. So you need something to balance it up. So that is why most of this question and answer will be provided in this class is going to base on real life scenario. It will appear to us that let us assume that this thing is in front of us, or we are in that position, we are in that category to attend to it. What will be our professional judgment? That is how to answer the question in this class and other courses in professional class. That is why we are different from people in skills. So please, Mr. Usman Fatai and Mr. Ismail Mohammed, can you please let us put down our hand? It's like you are raising up your hand for a question. Please, let's put down our hand, please. Thank you. So please, that is the basis of this class. Please, that is the basis of this class. I want us to follow this thing thoroughly, so that we shall never have cause to write this paper again. So once we follow the instruction, we'll have peace of mind and we'll never have any chance to write this paper again. And I wish everybody best of luck. So let's dive into the question. So let me select one person that will help us to. So before I proceed, so I am going to, okay, let me see. Let me just so now I have unmute everybody automatically. So if you want to ask me a question, you can put up your hand and I will call you so that I can attend to you. But before we proceed to this general question that we want to solve this night, I want to share the 4 tips for successful planning for our exam. And if we follow this step thoroughly, is going to help us, not only advanced audit and assurance and the other courses too. Okay. Don't worry, I will even share this standard with us. So it's just for sharing sake for now. So please, I want to share these tips with us, and it is very, very important. Please let us be very, very attentive. I can't zoom my screen again now. What is to zoom your screen?
So not you, not you. I think she's referring to the person that said you should make it larger. From our
Okay.
end, we can just zoom the screen and it will be larger. I think that's what she's
Okay.
saying.
Thank you. Thank you. Okay. So, Mrs. Ibukun, I'm going to appoint you. You will be the one to read the question for us. So please stay with me. Are you with me?
Yes, sir.
Okay. So you are our class monitress this night. Thank you. So before we proceed, I said I'm going to share 4 tips for us to take through our exam. And if we follow these 4 tips very well, it is going to help us. Number 1 tips is to understand the given scenario. All the courses we are going to be writing in professional class, let me use audit as a subject matter. Audit, you can never see any questions where they will just give you straightforward like that. What is general principle and responsibility of an auditor? No. What they are going to do is give you a passage. From that passage, they will ask you, maybe you are the manager in charge of the audit work, or you should report to the audit partner. So they will shall ask you a question. You see that when what I'm trying to say in the beginning, that everything we'll be answering in this class is going to be like uh it's going to be like we are in that situation. We are the one that will provide solution to that particular issue. So we should see ourselves as problem solver in that situation. So what you are going to do if the thing is happening to you as at that moment, that is what the ICANN is actually expecting us to write in the exam, not actually what they ask us in the question. Because what they ask us in the question is going to correlate with what we are going to do if we are the one in charge of that responsibility as at that moment. So that is number 1. So the first thing is to understand the given scenario. That scenario, that passage that you are saying, it's go a long way. It is very, very important. So the first thing to do is to read the scenario thoroughly to understand what they're actually saying in that scenario. So if you understand, you'll be able to project what you can say about it. That they ask you now, or after everything, they just say, as the manager in charge of the audit work, what will be your response to the management as regards to uh, auditor's report? So, like, the management is asking you, what will be the content of auditor's report? The auditor's report you want to give us, what will be the content therein before you give it to us? So, as an auditor, you cannot just start saying title page, the date, the management responsibility. It is practically wrong, because you want to give them, like, you want to sell yourself to them. So you should be able to give them something that will convince them that, as a professional, this is what you ought to see in this audit report I'm about to give to you. A proper preamble, that one would be an eye opener to what you are going to give them. And in their mind, the aspect of uh, professional skepticism or auditor skepticism will not be there. They will not see you they will not see your report as they cannot place reliance on your report because of your appearance of mind, or yes, appearance of mind is the way you even present yourself will make them to even lose interest in whatever you want to sell to them. So back to what I was saying. I said the most important thing is to understand the given scenario. You read through the scenario thoroughly to understand what they might ask you to write on. So that is tip number 1. Understand the given scenario. This is done by reading through the scenario thoroughly to understand what the scenario is actually trying to say. From that scenario, you will guess what they can probably ask you to write on. That's the number one. Understand the given scenario. The second one is to understand the requirements. Now, after everything you read through the scenario, there must be something that you are going to write on. Your ability to interpret that thing will go a long way for you to understand what you are going to write as your answer. So tips number two is to understand to understand the requirements. Excuse me, is to understand the requirement. Then step number three is we must try to link our answer to the given scenario. Link your answer to the given scenario. Now, from tips number one, we said we should understand the given scenario. In the passage, they will definitely make reference to one company that you want to, maybe X and Y Limited that has been in business for a long time, and this one, that one. So, whenever you want to provide your answer, as the case may be, try to link your answer to that scenario because you are trying to make reference that this solution I'm providing is in regard to the scenario you gave to me in the case of X and Y Limited. So it is practically wrong, and that is our major problem, that whenever we see a question like that, we not even read the scenario thoroughly. We just jump to the question. Then from the question, if once they ask you if the general principle responsibility of an auditor, you just start to be writing you without proper linking of your answer to the scenario, because they're actually coming from somewhere. So you cannot just deviate from what they ask you and you are expecting to get full answer. So tips number three is to link your answer to the given scenario. For example, this is how to link your answer to the given scenario. They ask you, what are the overall objective of auditors independent auditors overall objective of the independent of auditor and conduct of audit in accordance with international standard of audit? For example, that's the question. If you now want to answer, you now said the following are the objective of independent of auditor and the conduct of audit in accordance with international standard of auditing in the case of X and Y Limited, because they actually ask you to write this thing along with auditors objective of independence. So if you fail to do it like that, definitely you are not linking your answer to the given scenario. So that is tips number four. Please excuse me for like 2 seconds. Let me quickly pick this because it's very, very important. It's my boss in the office. Mr. Oladele, I think I told you to mute your mic. Why? Why now? Huh. Okay, so back to this thing. I'm sorry. Please, can we proceed now? Just use your favorite emoji if you are with me so that we can proceed. Thank you. Okay, so that is tip number three. I hope you are following me. I said tips number one is to understand the given scenario. Tips number two is to understand the requirement. Tips number three is to link our answer to the given scenario. Then tips number four is our time management, proper time management. Mrs. Blessing, please mute your mic, please. Mute your mic. When it is time for you to ask question, I will ask. Okay, so tips number four. Tips number four now is proper time management. Proper time management. This is one of the biggest problem that we face in the exam too, because we students, we did not plan our we did not plan our we did not plan our exam very well. So in the case of exam, we just tend to just jump to anyone that we see without proper time management. We've forgotten that these people that they are invigilating us, as soon as people just start submitting the next 1 hour, they will be checking time for you that, oh, 1 hour more, whereas you have 3 hours 15 minutes. So what I've been doing over the years, and it has been working for me, that I try as much as possible to set my time as if I'm using 2 hours 30 minutes. So, and I never start with question number one, because that number one, that is starting mark, can never be straightforward. I stand to be corrected. Can never be straightforward. Although sometimes, so even not sometimes, can never be straightforward. So why are we starting with question number one that we take all our time? Me, since I've been writing, I normally start with section C. Because that section C is 15 mark. I know I can write and get at least 13/15. So I used to start with that first, and I plan my time for that section C that I'm going to start. Maybe first two questions in section C that I'm going to start. I cannot spend nothing less than I cannot spend more than 30 minutes there. So 30-25 minutes, I'm done with two questions. I move to section B, or yes, I move to section B. I can use 1 hour there. So now I've used 1 hour 30 minutes or 1 hour 40 minutes for 4 questions. So I cannot focus on that the remaining time. I cannot use it to focus on that question number one. That is one of the tips to pass the exam. So with these 4 tips, I bet it with you. Inshallah, you are going to have a good testimony that, oh, I work with this and this thing helped me. So if we follow these normal tips, it's going to help us during our exam. So that is about the tips. Then we can now dive into the revision class today. So what's the name of this lady I just called now? I did not see her here again. No. Please, are you here? I don't know. What's her name again? What's her name? Oh, I call her name now. I did not see her again. No. Okay, let me just appoint another person. Okay, Mrs. Ibukun, are you there? Uh-huh. She has disappeared again. No. Ibukun, are you there, please? She has disappeared. These are the people. Now, this one, she's not responsible. Oh, yeah, now, okay. Let me unmute you. Let me unmute you so that you can just put on your hand here so that I can see you and unmute you here. I can't see you here.
So I'm here.
Okay, so let me add you as a co-host so that I can meet other people.
All right, sir.
Okay, let me just leave it like this.
The last tip is time management.
Option. again. Mr. Keblu said, please mute your mic now. This is not general class now. We are professionals here.
Hello. What's going on?
Sir, maybe you should mute all of us. If you can't find me, you can find the closest person to read the question. So you mute all of us. That way we'll be able to listen attentively.
Okay, so let me just mute everybody. Don't worry.
Always mute.
Okay. Okay. Balogun Mary, are you in the class? Mrs. Mary. Mrs. Mary, are you in the class, please?
Yes, sir.
Okay, please. You'll be the one to read for us. So I have add you as co-host so you can mute and talk. So please, I will increase the this in of this class so that you can read for us. Thank you.
All right, sir.
So you can start. Okay, you can go on. Start. Please read the question for us.
Are we doing question one?
Yes.
Okay. You're
Please,
a
can you please
manager.
speak louder? Please speak louder, ma. Thank you. So that others can hear you. Thank you. Oh yeah, let's go.
You're a manager in Ichad Daba and Co. Chartered Accountant, and you are responsible for the audit of Pro Group of companies. The group's main activity is engineering, metal fabrications, and related business. The group comprises of the parent companies and three subsidiaries. Your firm currently audits all the components of the group. Work is currently ongoing on the audit of the group financial statements for the year ended June 30th, 2022. When you opened your email this morning, you saw the following note left for you by the audit engagement partner. Hello, the audit senior has provided the drafted consolidated financial statement with the accompanying notes, which summarizes the key audit findings and some background information. At the planning stage, materiality was initially determined to be 950,000 naira and was calculated based on the assumption that Prowimis Group is a high-risk client due to the listing status. During the audit, a number of issues, including indicators that certain management estimates may not have been properly recorded in terms of relevant accounting standards arose. This meant that we needed to revise the materiality level for the financial statement as a whole. The revised materiality level is now determined to be 650,000 naira. One of the audit junior was unsure as to why the materiality level had been revised. The key audit findings on the group consolidated financial statement are in the attached notes. Thank you. Note 1. Revenue has been stable for all the components of the group, with the exception of Cooks Milk Company Limited. which witnessed a 25% decrease in revenue. Note 2. Operating expenses for the year ended June 30th, 2022 is showing net profit on a property disposal of 2 million naira. Our evidence includes agreeing the cash receipts to bank statements and sales documentation, and we have confirmed that the property has been removed from the non-current assets registered. The audit junior noted The audit junior noted when reviewing the sales document that there is an option to repurchase the property in 5 years' time, but did not discuss the matter with the management. Note 3. The property revaluation gain of 800,000 naira in the income statement relates to the revaluation of property at the group head office. The audit has not obtained evidence on the revaluation as the gain was immaterial. Note 4. Also, the actual loss on defined benefit plan of 1.1 million naira are attributed to an unexpected stock market crash. The group pension plan the group pension plan is managed by Aria Companies, a firm of independent fund managers who maintain the necessary accounting records relating to the plan. Other companies have supplied written representation as to the value of the defined benefit plan assets and liability of June 30th, 2023. No other audit work has been performed other than the ag- no other audit work has been performed other than to agree the amount reported in the financial statements to the supporting documentation supplied by Azure Company. Note 5. The goodwill of 5,350,000 naira relates to each subsidiary in the group management. In the group, management has confirmed in writing that goodwill is stated correctly, and our other audit procedure was to arithmetically check the impairment review conducted by management. There's an investment in associate company of 4,230,000 naira. The associate is a 30% holding in a semi-company limited, purchased to provide investment income. The audit team has not obtained evidence regarding the associate as there is no movement in the accounts recognized in the statement of financial position from the draft to actual. Note 7. The non-current asset held for sale of 7.8 million in the drafted financial statement relates to the trading division of one of the subsidiaries, which represents one-third of the subsidiary net assets. The sale of the division was announced in May 2022 and is expected to be completed by December 2022. Audit evidence obtained include a review of the sales agreement and confirmation from the buyer obtained in July 2022 that the sales will take place. Note 8. Two of the group subsidiaries are partly owned by shareholders external to the group. Note 9. A loan of 8 million was obtained in October 2021 at an interest rate of 20%, payable annually in arrears. The terms of the loan have been confirmed with the documentation provided by the bank. There was no repayment of the loan in the book as at prior year end required. A. Discuss the justification for the need for the need for the assessment of materiality as the audit processes requirement. B. Assess and report the implication of the key audit findings for the completion of the audit. The assessment must consider whether the key audit findings indicate a risk of material misstatement. Where the key audit findings refers to audit evidence, you must also consider adequacy of the evidence obtained, but you do not need to comment further specific procedures. Your answer must respond to the notes from the audit engagement partners and the key audit findings. C. State the reason for the review of item 543 and demonstrate how with its proper application during the audit. The audit team can obtain sufficient appropriate audit evidence on management processing and accounting for estimates.
Okay. Thank you, Mrs. Mary. Thank you so much. So you can mute back. You can mute your mic back. So I don't want to, because of the time, but that's the essence of this class. I will say ask. So please, can anybody tell me what you understand by this scenario? Just 2 or 3 persons. Please just put your hand up. I'm going to call you. You will unmute and you will talk. Just 3 persons. 3 people, please. Can anybody hear me at all? Please just raise up your hand so that I can call you. Just raise up your hand so that I can call you. What do you understand by this scenario generally? Okay. Mr. Opeyemi. Okay, go on. Okay, Mr. Opeyemi, please, you can mute your mic now and talk. Mr. Opeyemi, you can mute your mic now and talk.
Okay, sir. Okay, sir. Thank you, sir. Sorry, I said from my own little knowledge, I just want to see that the examiner just want to test from the report provided. Maybe some of the statements or the findings of the auditors is material or immaterial.
Okay, thank you so much. You can mute your mic back. Thank you. So, Mrs. Agbola. Mrs. Agbola, are you there?
Yes.
Okay,
So I
please,
said, good evening,
let's hear
sir.
you, please. Good evening.
So I said, in addition to
Can you
what
please
you
speak
said,
louder? It's like
you
you're
also,
on the bed. Can you please speak louder? We
no,
can barely hear you.
okay, can you hear me better now?
Yes, it's better now.
Okay, so I said, in addition to what Mr. Fayemi said, it's also to test our knowledge about key audit findings that we discovered during the audit and how we should note them down.
Okay, thank you, ma. So, you can mute your mic back. Mrs. Aishat Balogun.
All right, good evening, sir.
Good evening, ma.
So, from the scenario, what I understand is that we were asked to assess on the key findings. We should reassess the reality because they were given they had a materiality threshold before, but we were told that there's an adjustment on the materiality. So we're told to check into it, and we're also given some different scenarios, additional information. So we have to look into it to adjust it and to also check for the key findings in the analysis, sir.
Okay, thank you. So, this question generally for us to understand. So, this is where we now examine the tips that we were talking about the other time. I said we should understand the given scenario. So, this scenario is telling us generally that you are the manager in charge of audit work. So, after everything, then you've done everything, then you move your audit planning. One of your audit planning is to set materiality before you go to the field. This is how it works. When you want to commence an audit, you must have sent your engagement letter, your confirmation letter, your arrangement letter of the document you needed. They will send it back to you. The client will send it back to you, giving you their management account. Management account is just like their trial balance, their account they prepared. So from there, you compare the financial statement, the account prepared for that year of assessment with the previous years for you to set your analytical review to yes. So from there, from your analytical review, you'll be able to set your materiality. You've done everything possible as an auditor, you submit, then it has been agreed upon. So then, before you now, that is then the case closed for that week. Then when you resume the next morning, you find a letter on your table telling you that one of your audit associates find out that there is a lot of error and which can lead to misstatements in the financial statement if we did not review the materiality. In this case, they set the materiality around 800 or 900,000 as the case may be, that any transaction or any figures in the financial statement 900 and above, that is what we are going to check as our audit for our audit evidence. That is what they are saying there, that any transaction that is not up to 900,000 naira, we will not check. Please, are you guys following me? Please, let me just see your emoji if you are following. So it means that they've set 900,000 naira before as their audit materiality. That is, any transaction that is more than 900 and above, that is what they are going to check. But your audit associate now check that, oh, okay, there's a need for us to review this materiality, because when I was checking through this over the night, I found out that if we did not revise our materiality, we will definitely skip some transaction that will cause material misstatement on the financial statement. So there's a need for us to reduce our materiality from 900 to 600 or 650 as the case may be, as they reported in the scenario. So that is question number one. It has to do with materiality, then circumstances that might warrant an auditor to revise the materiality from what they set before to new one. That is what the concept of what this number one is telling us. So you can see the way I just interpreted it. If you did not understand that scenario very well, it will be hard for you to interpret the requirement for you to now know what you are going to write. So that is that on number one. So if you want to answer this, you are definitely going to give them the meaning of materiality. First of all, because we assume that the examiner is a neutral person. He does not have idea about what he's going to. So what the information you provide to the person is what the person is going to use to justify you and justify what you are actually talking about. So it is practically impossible or practically wrong for you to just start writing anything you know about it without considering that this key factor, which is ISA 320, it talk about materiality in audit. That is audit materiality and planning. That is ISA 320. That is what ISA 320 talk about. That is materiality and planning in audit. So it is going to be wrong for us to just start writing without making reference to that ISA 320 that talk about materiality. In this case, we have to give them the meaning of materiality and quickly give them the circumstances. In the case of this scenario that I read, the circumstances that might warrant an auditor to revise their materiality from the initial set materiality to the new one. That is on number one. I'm not moving the screen. You said you are not seeing the screen. Please, can anybody see my screen, please? So
Yes.
I don't know why some people saying they are not seeing my screen. I've not moved the screen. I'm just trying to
I cannot
explain.
see the screen now.
You said what? Okay, so that is
I can't see the
requirement
screen.
one. You can't see the screen. Maybe it's your network, because my screen is moving here. Can anybody screen my screen?
I
See my
can
screen,
see.
please.
Let
People are,
him calm down.
so people are
Let
confirming
him
that
log out and log in. Log out and log in, please.
it's your network. So
Yes, you can see the screen.
that is, please, if you have any question that will disrupt the class, just put it on the chat box. I will see it. The one you are saying you cannot see my screen now, and I don't know where I stopped. So now, that is that about requirement one. Is actually talking about materiality and condition that might warrant an auditor to revise the materiality initially set. Then two is talking about we should assess that is in this they say we should assess and report the implication of the key audit findings for the completion of our audit. Then I said your assessment must consider whether the findings indicate risk. So this is what they are asking us to do. You see, we read something from go 1 to 9 as the case may be. That is the scenario that will go with question number 1B. So then I said that this scenario, you should identify what are the risks that will cause material misstatement on the financial statement. We should identify the risk. That's what they're asking us here. From that scenario, what is the risk of all these things they list out? What is the impact of this thing on the financial statement? That is what they're asking us. Then the C is to justify the reason on the review. What is the new review of ISA 540, which is audited for accounting estimates, including fair value and related disclosure? That's what they're asking us there. So this one has to go with normal standard in our financial reporting or corporate reporting, as the case may be, but we are still going to establish it here. So let's go to the solution. So, and I said, Mrs. Sulaiman, do you have a question? You raise up your hand. Any issue? Any issue, please? Please, if you don't have any question, please put down your hand, please. Thank you. So let's dive into the solution. How do we start? They said discuss the justification need for reassessment of material, discuss the justification for the need for reassessment of materiality as the audit progresses. I think I've explained what this thing is talking about. So before we start, we must give them the meaning of materiality. Materiality. So, and there are two things here. We have materiality and performance materiality. Let me quickly explain before I will now give us the definition of the two scenario, then how it affects our materiality. Materiality in audit is nothing other than the magnitude of omission or misstatement in the financial statement. I will say it again. It refers to the magnitude of omission or misstatement in the financial statement that could influence the decision of the investors, the creditors, or the other stakeholders. I will say it again. Materiality can be defined as the magnitude of an omission or misstatement in the financial statement that could influence the decision of the investors, the creditors, or the other stakeholder. That is, it is the magnitude set by the auditor during audit planning on which is going to he or she is going to base his audit evidence on the financial statement prepared by the management in order to form an opinion whether the financial statement prepared by the management is of true and fair view and it is free from material misstatement. That is the meaning of materiality in audit according to ISA 320. Please, do you understand that definition? Can I proceed, please? Let me see your favorite emoji so that I can proceed. All right, thank you. So, if you have a question, please, after this, I will ask. I will ask so that you can answer. So that is materiality. Now, performance materiality. So, according to ISA 320 also, performance materiality is the lower of materiality threshold. I will say it again. Performance materiality is the lower of materiality threshold than overall materiality that is applied to specific accounts or transaction to ensure that the audit procedure are designed to detect material misstatement in the financial statement. I will say it again. I said performance materiality, it is the lower of materiality threshold. It is lower of materiality threshold over the overall materiality, and it is applied to specific accounts or transaction to ensure that the audit procedure are designed to detect material misstatement that could be material in the financial statement. Please, I will say it again for the last time. I said performance materiality can be defined as the lower of materiality threshold set lower of materiality threshold set other than the overall materiality to apply to a specific account or transaction in order to ensure that the audit procedure are designed to detect material misstatements that could be material in the financial statement. That is that about performance materiality. So we want to explain this. You say performance materiality, it is the lower of materiality threshold set other than the materiality. That is the lower of materiality set other than the materiality to ensure that the audit procedure or some account to ensure that account or transaction follows the audit procedure and they are designed to detect the material misstatement that could be material in the financial statement. That is that about performance materiality. So we want to say it generally that performance materiality, it is the materiality set below the normal materiality to ensure that some accounts or transaction follow the normal audit procedure so as to detect material misstatement that could be material in the financial statement. With that, you have already explained the meaning of materiality and performance materiality as regards to ISA 320. You now continue that. However, the following are the justification or the assessment for materiality as the audit progress. You know, that is not what all those performance materiality and the materiality that we mentioned before was not actually the part of our answer. The answer is what could be the reason. The question is what could be the reason why we reverse or we reassess our materiality initially said. So, but you need to give them the meaning of materiality as regards to ISA 320. So you say according to ISA 320, you give them materiality can be defined as as I explained before. Then, however, or again, performance materiality can also be defined as this, in accordance with ISA 320. Full stop. You now said, furthermore, the following are the reasons or justification for the assessment of materiality as the audit progress in the case of, what's the name of the company that we want to talk about? In the case of, what's the name of the company? So you now make reference to the company. In the case of, this is, where is it now, sir? Okay. In the case of, what's the name of this company? In the case of, what's the name of the company here? There should be name of the company around it.
From group of company.
So, home.
Let me see. In the case of that, so you now make reference to that company. It means that for the answer you want to provide is in accordance with that company or the scenario they gave you in the beginning, so that you are not deviating from the normal answer you're supposed to give, because you have actually tried to link your answer to the given scenario. Please, as I explain this, do you have any question generally that you want to ask that is not clear to you from the meaning of materiality, performance materiality, and the reason for the adjustment of audit materiality as the audit progress? Please, any question generally before I proceed? Any question? Please, if you have a question, please raise up your hand. Mrs. Ifeoluwa, please. You can unmute and
Hello,
talk.
sir.
Please go ahead,
Yes,
man.
sir. Thank you, sir. Yes, sir. When you were explaining the performance materiality, I think my
Yes.
network switched off a bit, so I couldn't get the actual meaning, because when you were saying is the lower of materiality set to ensure that account or transaction follows normal, that was when my
Procedure.
um
Yes, normal procedure to detect material misstatement that could be material in financial statements.
okay, sir.
What that one is saying
Thank
that the materiality, performance materiality is the lower of materiality threshold set to ensure that account or transaction follow normal audit procedure to detect material misstatement that could be material. You know, not all material misstatements will affect the financial statement. Some are immaterial, but the reason why we set performance materiality is to detect some material misstatements that can be material to the financial statement. That is why we set performance materiality. I hope I've answered your question. Madam Ifeoluwa,
Yes,
can
sir.
I proceed?
Yes, sir.
Thank you.
You have
So,
answered,
Mrs.
sir.
Blessing,
So the other
okay,
question is that
go ahead. Go ahead. Go ahead. I
we
can't
want to
hear you
answer
again.
this
No.
question.
Okay.
I said if we want to answer this kind of question, I'm asking that if we want to answer this kind of a question, we must like define the two definitions before moving further. Is that it, sir?
Okay. Let me ask you this question. This question talk about materiality, right? Let
Yes,
me
sir.
assume that you are the one that want to mark now. So the question talk about materiality, but the actual question asks what is the need, what are the conditions that might make an auditor to reverse the materiality already set during the audit process? Abi, that was the question.
Yes, sir.
Is it going to be good for me to answer like you want to mark me for me to just proceed to that what you ask me without giving you the proper meaning or insight to what that materiality actually means? That is why you are in professional
Okay,
class. That is why you are in
okay,
professional
sir.
class, because they assume that you're supposed to have very vast knowledge about it. So you should tell me everything I need to know about that materiality before you even give me what, because from that definition you give me, it will be an eye opener or insight to what I'm going to mark or what I'm going to get or what you are going to write next. So if I did not understand the concept of what you are trying to say, I might find it difficult to even understand the concept of the answer you are giving me. So understanding the concept is the real deal here. So it is a must. It is important for you. It's not a must for your own sake, but it is important for the sake of you passing the exam to let the examiner know that this is what materiality actually means before you now proceed to what they actually ask you to write. Do you understand, man? It is very, very important.
Yes, sir. Thank you, sir.
All right. So, Mrs. Blessing, your question. You can put down your hand, man. Mrs. Blessing, please quickly let's proceed. Mrs.
Okay,
Blessing,
good evening.
good
Okay, good
evening, ma.
evening, sir.
Yes,
Yes,
ma'am.
sir. Please, I wanted to throw more light on the reason why the auditor need to do a reassessment on the
Okay.
materiality that was already
That's good.
set up.
Definitely now. That's where we're going to.
Okay,
Please,
okay,
if you have a question, you should raise up your hand. Please. Thank you. You can put down your hand, man. Okay.
okay.
So which other person? Which other person? Mr. Kazim, you want to ask a question? Okay, so Mrs. Blessing, you can put down your hand. Then the last person is Mr. Kayode Opeyemi. Please, you can.
Thank you. Thank
Okay,
you, sir.
sir.
Also, I lost connection where you were trying to define materiality itself. So, but I got the second one.
Okay.
Yes, sir.
Materiality is just the threshold set by an auditor during audit planning to
Okay, sir.
ensure that all accounts or procedure are all account or transaction are checked so as to determine material misstatement that could affect the financial statement. That is what you set during the audit planning that, oh, so in the case of this question, if you could read the question very well, they said the initial materiality they set was 900,000. That is, it means that in the financial statement, whether it is on liability or on asset or on income statement or on the revenue or the cost of sales, the expenses, as the case may be, any transaction in this this thing that I mentioned, any transaction that fall under that thing that is below 900,000, we will not check as audit procedure. But it is transaction that is 900 and above that we check for our audit evidence. So that 900, it is the materiality they set. That is the magnitude of omission that an auditor said during what the audit planning to ensure that all transaction or account follow normal procedure so as to determine the material misstatement that might be material in the financial statement, so as to determine what the material misstatement that might be material in the financial statement. That is materiality. But performance materiality, it is lower of materiality threshold set, that is lower. So in the question again, they said the materiality was later reviewed down to 650,000 naira as against the initial one that they set is 900. So in that case, the 900 was the materiality set, the 650 is the performance materiality. Do you understand that one now, sir, Mr. Okoyemi?
Yes, sir. Thank you very much, sir.
Please, can I proceed? Okay. So,
Yes, sir.
Mrs. Baker, please, I will just attend to you so that we can proceed. Please, your question, sharp, please, before we go.
Okay, good evening. Good
Good evening,
evening.
ma'am.
Okay, I just want to ask
I
that
can hear you. Proceed.
okay, I just want to ask if we can still have access to this class after this evening. Maybe perhaps the class is being recorded.
Yes, it's being recorded. Is that what you want to ask?
Yeah, that's all.
Is
Thank
that
you.
all, ma'am? Okay. Please,
Yes,
you can put that
that's
in
all.
hand. Thank you. Okay, so let us proceed. You can put that. You can mute your mic, ma'am. Okay, so back to our answer. We've defined the meaning of materiality and the performance materiality. Now, to the justification, to the real question that they ask us. Please, can you hear me? Can anybody hear me? So that I'm not talking to myself. Please, if you can hear
Yes,
me,
sir,
just
can
let
hear
me
you.
see your favorite emoji so that I can proceed, please. Okay, thank you. So now, in this case, they now said we should discuss the justification. You know, I said, we'll first of all give them the meaning of materiality. First of all, the meaning of so if you want to write now, this is how to start. When you write down 1A, you now write that in accordance with ISA 320, which talk about materiality in planning and performance in audit. That is how to start, because ISA 320 talk about materiality. So for you to convince the examiner, you say that according to ISA 320, which talk about materiality in planning and performance in an audit, it is, however, important to define the meaning of materiality. You said materiality, according to ISA 320, can be defined as the magnitude of omission. So you give them the meaning of materiality as I explained to you before, or as I give you the meaning. Then you also give them the meaning of performance materiality. So after that, you also said, according to ISA 320, the auditor require to apply the concept of materiality where, number one, during planning of audit, that is where materiality is required. During planning of audit, then when there is evaluation of effect of material misstatement, that is where materiality is what is required. So you now proceed that, however, the following are the, please let's mute our mic now. Okay, so after you've given them the meaning of materiality according to ISA 320, and you give them the meaning of performance materiality. So you now said that, however, the following are the reasons that might warrant the auditor to revise the or to reassess materiality as the audit progress. Number one, indicate, okay, let me say it again. We said the following are the reasons or the justification needed by an auditor for reassessment of materiality as the audit progress in the case of, so you now make reference to that company that you are talking about. I can't remember the name of the company. You now make reference to the name of the company. So I'll say it again. After you giving them the meaning of materiality and the performance materiality, according to ISA 320, you now said the following are the reasons or justification for the need for reassessment of materiality as the audit progress in the case of so or ABC Limited. Number one, what are the reasons? You now state the reason. When there is evidence of material misstatement on the financial statement, that is when the materiality can be reversed. Number two, when there is when the misstatement is material and it can cause going concern issues for the client or for the organization, that is where the materiality can be reassessed. Number three, when there is change in circumstances that occur during the audit, that is change in circumstances that occur during the audit, like what are the circumstances? Maybe disposal of major parts or major asset of the company. That is where the materiality can also be what? Can also be reversed. Can also be reassessed. I've mentioned three. Number four, when there is actual result of the audit client that may turn out to be what? Quite different for the focus. That is when there is significant change or actual result change in the performance of an organization as a result of a change in focus, or the organization change their or they review their plan for the year and it's going to affect the materiality already set. That is when the auditor can also reassess the what the or can also be reverse the materiality earlier set. That is number four. I've mentioned four like that. When the auditor become aware that the financial statement is not of true and fair view, or the financial statement is the major transaction in the financial statement is highly what? Material in nature. That is the major transaction. Most of the transaction in the financial statement, they are highly material, which can have effect on the financial statement and performance of the organization. That is where the auditor can also do what? Can also reverse the materiality initially said. So with this now, you have been able to give them the meaning of materiality, the condition that might warrant. Okay, you've given them the meaning of materiality in accordance with ISA 320, then the meaning of performance materiality, and the circumstances that might warrant the auditor to what? To reassess the materiality as the audit progress. That is that about question number one. No more, no less. So with that, you are substantially give them the meaning of materiality, because if you check very well from our definition of materiality, we are able to give them the reason why we can reassess for materiality as the audit progress. So with that, you have given them the meaning of materiality, then the performance and materiality, and also the reason why materiality can be what? Can be reversed. If you answer this question like this, I bet it with you. I bet it with you. You are going to have your full mark. So the major thing is that almost all of us here, I mean almost all of us here, for the people that have written this question before, paper before, and the people that are just writing for the first time, or majorly the people that have written this paper before, the major reason why we want to write again is that we did not take proper account of the answer we want to write when we are writing our professional exams. And that is why the thing is like that. You can see the way I narrow my answer I give us the meaning of materiality because that is the art of what they are talking about. Then the performance materiality, that is what my warrant us, or the meaning of that thing that might warrant us to reassess our materiality as the audit progress. They are now give us the circumstances. I itemize like 2 or 3. The scenario or the justification that might warrant an auditor to reassess the materiality as the audit progress. With that, no more, no less. As simple as ABC. You don't owe them anything, they must give you your full mark. So that's all about 1A. So any question on that 1A before proceed? Sharply. Any question? So let me just unmute so that people can ask. So Mr. Morris, please, you have the floor now. Please be fast about it. Your question, please. Let me quickly, so that we can proceed.
Good evening. Good evening, sir.
Good evening, sir.
Good
Please,
evening,
I can
sir.
hear you. Go on. Good evening, sir.
Good evening, sir.
I can hear you. Proceed. I can hear you.
The thing I want to find out is that, okay, what I want to ask is that in oftentimes in the exams, we see that they will put the question in a format that we are maybe a trainee auditor or the audit partner or whatever. Now, they will ask us to always write a report of our procedure, like in this question, they will ask us to write a report. So is it out of place if we put our answer first in a report format, like a memo format first, before providing all the other information included within that
to
format?
answer that,
I repeat,
think
is it out of place if we put it like a memo format from?
I understand your question.
That's it, sir.
I understand your question, but in this context, I think that one majorly happen in advanced tax and advanced tax, yes. But here, if you are going to write it in case of report, they will specify in the requirement, like this one now, like this question number 1B now. They said assess and report. It means that you must write report about this thing you want to talk about, which is this 1B. So whenever you are required to write a report in your answer, they would definitely state it in your requirement. So it's only in advanced tax that you see that number 1 to 7, the requirement will also talk whether to write internal memo or to write external report to the client or this as the case may be. So in this question, if it is categorically stated in the requirement as regards to advanced audit and assurance, you state it there. But if it is not required, please don't write it. Do you understand, sir, Mr. Morris? So in this case now, it was not required for this 1A, but in this one they said assess and report,
Yes,
meaning that we are going to write report. So meaning that we are going to write report. So it might be external memo, and this one is external memo. I'm sure it's from the from you to the engagement partner. So you are writing internal memo that is from you to this also person. So this B is going to go on report, while this A does not require report. Do you understand now, sir? Thank you. You can mute your mic. So Mr. Kayode,
very well,
please,
sir.
your
Thank
question.
you.
Yes, Mr. Kayode, your question. Please let us
Thank
be
you very
fast
much.
about it. You are
Thank you,
welcome,
sir.
sir.
Sorry, sir. At times, you know, this is, sir. Somebody may not remember the particular ISA that really
Okay.
talk about all these things. But you know, we can. Is there a way we can play around it without mentioning the ISA?
Yes, that is it. If you did not remember, but make sure that what you are saying, you are saying it as a professional accountant that will not deviate from, or that will not deviate you or make anyone see you as if you are not an incompetent accountant or you don't even know what you are saying. So even your definition should be as substantial as possible for them to be convinced, even though you did not make reference to that ISA. So if you now remember the ISA, it's going to make you like you are sure of what you are saying, and it will even boost your confidence because you make reference to that in accordance with ISA this so. That is why you are giving this definition, or in accordance with ISA so. ISA so define this thing as this. You might not define it word to word according to the ISA, but with your understanding on that standard or on that concept, you'll be able to make reference to according to ISA 320. I'm not moving screen, no. I'm explaining. I'm not moving screen. So this is now should not be, you should not use this thing to interrupt our class. I'm actually explaining something. You just interrupt the class. Why now? So let me proceed. I said that in the case that you not remember the required standard, it is fine. But try as much as possible to make your definition as substantial as possible to convince the examiner that you actually know what you are saying. But however, if you remember, it's going to be like additional mark to you because you are actually giving the definition or giving what you are writing with your understanding with ISA 320. That is that about that. Do you understand, sir, Mr. Okoyemi?
Yes, thank you very much, sir.
Okay. Please, you can put down your hand. And Mr. Morris, please put down your hand. So, Mr. Benjamin, last, please, let's hear you. Mr. Benjamin is not there. Which other person?
I'm here, sir. I'm here, sir. Good evening, sir.
Please, so yeah, let's hear you.
Okay, my question is in consonance with what the last person said, but I just want to ask, suppose you can't remember the particular ISA, how can one write it in a professional way while trying to make reference to a particular?
I just
how can one put it down? Let it be that.
What I just explained. That make your definition as substantial as possible. Like write everything you know. As if that materiality, you already understand that materiality to the core. So write everything you know. Don't just write like 2 lines or 3 lines and you said you have given them the meaning of materiality. Let it be substantial enough for you to convince the examiner, because you are actually in professional class. You cannot write 2-line definition and you present it to the examiner that is this and you expect your full mark. So they will assume that it is a guesswork. You don't even understand what you are saying. So your ability to write everything you know. You can see from my definition, I try to go left and right. I can give you about 3 or 4 definitions of materiality as I am now, based on my understanding. Materiality can be defined as a threshold set by an auditor to determine the material misstatement in the financial statement, and also in order to form an opinion whether the account is of fair and fair view and it is free from material misstatement. That is one about materiality. I can also say materiality can be defined as the threshold set by an auditor during audit planning to ensure that transaction and account pass through normal audit procedure in order for the auditor to determine all material misstatements that can affect the financial statement. That's another definition. So you can see the way I'm going left and right, and I'll balance it up in the sense that after giving them the comprehensive definition, it's going to be substantial enough for the examiner to understand that this is what this person is actually saying. Oh, this person actually understands what you're saying, even though I did not remember the standard that talk about that thing. For my understanding and my substantial definition will definitely give me go edge over the others when I'm giving them definition, when I did not remember the standard that talk about that thing. Do you understand now, sir? Okay, so I don't want to call many people, but we've spent much time here. So okay, let me ask last person. Okay, Mrs. Bukola, please. Lastly, Mrs. Bukola.
Okay, good evening.
Yeah,
Well,
good
mine
evening.
is actually not a question, but we all assimilate differently. So I was thinking if you can just like go at a bit like a slow pace. Maybe
You said
like
what?
you said,
I can't hear you.
okay, what I'm trying to say is that we assimilate differently. So at the point of answering each questions, if you can at least slow it a bit down so we can get the point you're passing on to us. That's it.
I'm sure I'm very, very slow. At least we ought to have moved past. If we continue like this, we'll not even finish this number 1 before 11 o'clock. So I think I took it very, very slow. I take my time to give us the meaning of materiality, the concept of my performance materiality. And before this one, I even mentioned, we even spent more than 30 minutes. So I don't know how slow I can be again, so that we'll be able to finish on time and cover what we're supposed to cover. And mind you, the essence of this class is not to come and give us word to word, figure to figure, but we're just here to dish out how we should answer our question proper, and how we are able to we can read through our scenario to know what they're actually talking about, so as for us to know what we are going to answer. I hope I am communicating, man. Sorry, I have to, and I'm not trying to like saying what you are saying is not wrong, is not correct, but we actually spend much time, more than 30 minutes on this 6-mark question. So how many time you want to spend on 15-mark question when you said I should still go over it again? Or you are saying subsequent definition or subsequent
No,
explanation, I should slow down a bit.
subsequent explanation.
But I'm still slow now. I'm not still fast in this one that I just finished mentioning now.
We can proceed.
Okay, I understand, Sha. No problem. Thank you. So that's that. No other question. So let's proceed to that 1B. Let's proceed to that 1B. So this 1B now, I'm going to Mr. Morris, so you can put down your hand. Please, if you are still hearing us, please put down your hand. Okay, so let's quickly move to 1B. So this 1B now, the 1B now is saying that we should assess. Let me see. The 1B now is saying that we should assess and report the implication of the key audit finding for the completion of audits. They now said that your assessment, that is what you are going to write, must consider whether the key audit finding indicates risk. That is, everything you are going to write must indicate whether there is risk in that audit findings as regards to material misstatement. And where there is audit key finding refers to audit evidence, we must also consider the adequacy of the evidence, but you do not need to recommend for further specific procedure. What they're asking us here, that the key audit findings here.
Hello,
Please,
Mr. Indus.
yes, sir.
Sorry,
I can hear you. Please go on.
I have to log out now. So
Okay.
I want to just tell you, in case you finalize the class, I want to end
No problem,
the
sir.
class. So the first thing you do is that you have to stop the recording. You know how to stop the recording?
Okay. Yes, sir, of course.
Hello, do you know how to stop the recording?
Yes.
Okay, so you have to stop the recording, stop
Okay.
the transcription. Transcription is that word file beside the recording. You have to stop it, both of them.
This thing. Okay.
That blue,
I've
yeah,
seen it.
that's the transcription.
Yes.
So you have to stop both
Okay.
of them. Then you will now click on the red this thing. You will now hand the call for everyone. That's what you should do.
Okay. No problem. Thank you,
So
sir.
good night, guys. Enjoy
Okay,
your
good
class.
night. Right. So for this 1B, what they're asking us is that we need to assess and report. They've given us this 1 to 9 this thing, that is the audit finding. They now says that inside this audit finding, we must consider if any of this finding indicates any risk of material misstatement. Then if we did not do that, then if any of these findings indicate us to consider any audit evidence obtained, that is, if this case will require us to substantiate our assessment with audit evidence, we should also state it, but we must not recommend for specific procedure. That is, we must not provide solution for that risk that we detect, or for that audit evidence that need to be used to substantiate the audit findings. Please, am I communicating? Let me just
sir.
Please, I don't know if you understand what I am saying. Please, if you understand this, if you don't understand, please let me see your hand up so that I can quickly re-explain. Okay. People are much. Okay, let me start from Mrs. Oriaku Joy. Mrs. Joy. Mrs. Joy, I will just take 4 people to ask 4 people. Mrs. Joy, are you there? Okay, let's call another person. Then Mr. Everybody are putting down their hands. Okay. Mrs. Gift, please. You raise up your hand. Please, let's hear you. Please, quickly. The time is going. Quickly, quickly. Oh, yeah. Oh, quickly, quickly. Oh. Nobody's raised. So we understand this thing. Okay. Mrs. Joy, I asked you before. You ran away. Okay, please. Do you understand this? Oh, yeah, please. You raise up your hand. Let me hear you. Any question? Can anybody hear me, or am I not the one? Am I talking to myself? Can anybody hear me, please? The class is on mute. You can talk. But these people are raising up their hands now, and I called them. They did not say anything.
I
I did
guess
not
you
unmute.
mute
I have
everybody.
unmuted
That's what they're
everybody.
saying
I
in
have
chat.
unmuted everybody. I have unmuted everybody. Okay. Sorry.
Sir,
So
good evening, sir. Good, Mr. Tunji, please, if
please
it's
calm
possible,
down,
just raise
calm
hand.
down, calm down. Hold on, ma. Please. If you have a
Okay,
question, please. This class is a professional class. Let's raise up our hand so that I will call you. Mrs. Gift, please, let's hear you. You raise up your hand.
Thank you very
Thank you.
much. Please, can you just go all over the B part again? I think for the benefit of myself and others.
Okay.
It's not
Thank
clear.
you.
So thank
I'm
you.
sure your question covers everybody that want to ask question. So now,
Yes.
okay, this is what the question is talking about. So you believe with me that another thing is our ability to interpret, because I'm very, very sure that if you see this kind of question in the exam, we'll just be looking like this, that we will not even know what to write. So they've given us 9 audit findings here according to the question. They now said we should assess and report the implication of this key audit finding for the conclusion of audit. They now give us notes. They guide us that if you want to write, see where we are going to write, see the limit. They said we should assess the audit finding whether any of these 1 to 9 indicates any risk of material misstatement. That's number 1. And they said where the key audit finding refers to audit evidence, then again they said anywhere in this 1 to 9 where they refers to what audit evidence, we must also consider the adequacy of the evidence. That is, we must consider the importance of that evidence on the financial statement. That is, if the evidence is going to have effect on the financial statement or not. That is, where they said maybe they said, okay, some transaction need some transaction of 8 million. The auditor now requests for audit evidence. In that situation, there is key audit evidence that refers to audit evidence. There is key audit findings rather that refers to audit evidence there. That is, the audit findings telling us that transaction of 80 million require audit evidence. So there we will have to consider the importance of that audit evidence on the financial statement. That is, if they did not give us that audit evidence, we will have to consider the importance on the financial statement. That is, what is the importance of this audit evidence on the financial statement. But in everything that we are going to write, we must not provide solution for all this risk of material misstatement or any audit evidence that they did not give to us while we are assessing or reporting the implication of these audit findings on the to our audit manager. I will take it again. We have 1 to 9 audit findings here. They said we should assess and report the implication of these audit findings. They now said that anything we want to do, we will have to assess the audit findings if it indicates any risk of material misstatement. That's number one. Then again, where they mention that where they mention in this 129 that the transaction require additional or require audit evidence, we have to what? State the importance of that, or the reason or important why it is important for the company, or as the case may be, to provide that audit evidence, or why it is important for the auditor to get that audit evidence on that transaction they are talking about. But we must not, we have to state the importance, that is, give me this transaction. If you not this I will require for this thing to enable us to do this, to require for this audit evidence to enable us to ascertain the adequacy of this transaction in the financial statement. But if they did not give you that audit evidence, it has its own risk on the financial statement. So this question now limits us that we must only provide the adequacy of that audit evidence, or we must also talk in line with if the transaction indicates any risk of material misstatement. But we must not provide any recommendation in our answer, as the case may be, when we are writing. That is why they said, but do not need to recommend further for specific procedures. Please, do we understand now? Please, do we understand now? The class is not muted, please.
Yes.
So, can I proceed now, please?
You can, sir.
Yes, proceed.
So, Mr. Meshak, what was his name? He asked that time that, is there any situation whereby we can write a report? This is where we are going to write reports now. So, in the case of this scenario, is it internal report or external report? This is where you will know. They said key findings on the group consider the key audit findings on the group consolidated financial statement are in the attached note. Thank you. And I said revenue and so this thing like this. After everything, what did you now say? Who is writing this thing? Okay, you said, is it internal report or external report? I want to hear.
External.
External for external report. This thing is internal report.
It is internal report. You are reporting to your superior.
You are reporting to your manager. Your manager is not in another company now. It is internal memo. That is from from Emmanuel, or as the case may be, or from Idris. From Idris, which is, you state your distance, from Idris, junior partner, or audit senior, or audit associate, to the manager in charge. So it's from Idris to the manager. That is, it is internal memo, not external memo. If it is external memo, you are going to write the address of the client you are writing to. But in this case, it is internal memo. So now, let us assess this in one after the other. Let us assess it one after the other. So it is we here that we are going to determine. They said revenue has been stable for all the components of the group, with the exception of Cope Smink Company Limited, which witnessed 25 decrease in revenue. So when you want to write, I told us we are going to put the name of the company, our company. Me and my audit, me and my manager, we are in the same company. So put the name of our company on top. That is the name of our company, because I'm writing internal memo. That is maybe, what's the name of the company? What's the name of the company now? Maybe Ichadaba or something. Or let me just say from you just write, let's write Apex Tutors Consulting Limited, for example. Apex Tutor Consulting Limited, that is the name of our firm. He now said from Idris, the what? The audit manager, to what? To Mr. Kazim, as the case may be, or Mr. Kabir, the audit engagement partner. That is from Idris, the audit manager, to Mr. Kabir, the audit engagement partner. He now start writing key audit findings and assessment on the implication. Any question? Is someone asking me a question? Is someone talking? Okay, so now let's assess it together. Okay, Mr. and Mrs. Sulia, please, your question, ma.
Okay, thank you. Like, please, let's make it practical. Mr. Idris, Mr. Apex, everything. Open my diary. Let's make it practical, please. So
you said what, ma?
I said we should make it like we put in Mr. Idris, everything. It's not progressing with the question, please. So it's to know.
And like I said before, it's like you are not understanding what I'm saying. Like, this name is not what I'm saying, that we are not here to actually, so far you understand the concept. Like, I actually use this name, my name, because that name I cannot even pronounce. So it is what I understand I'm going to say. It's for you to just know that this is what they're actually talking about. When you see it in the exam, you know what to write. So it is the way I'm trying to explain. You know, I'm not trying to like give it the way it is in the DC, because the names I cannot actually pronounce. That's number one. Then secondly, I think the essence of this class is just to understand what we need to write in the exam, not to come and be writing maybe word for word, figure to figure here. So it's the concept and understanding we need, because we are actually professionals here. So nobody will tell us that this is how to write this is how to write. It's just to explain to you this is how to go about. So it's in your own way, you develop it to the standard way that can substantial enough for you to pass the exam. Madam Sulia, do you understand now, ma? Hello?
Thank you, sir, I do.
I hope you are not angry.
I'm not. No.
Okay. So let's proceed. Because I don't want it to be like, why is this man just pushing me away? So now, let's understand the concept. So let's say Apex Tutor Consulting Limited. Now, so we now want to write, you are the audit manager, I am the engagement partner in charge. So this question is asking you that there is audit findings here. So you want to report that audit finding to me if there is any risk of material misstatement, or any where they make reference to audit evidence, that you must state the adequacy of that audit evidence in the findings, but you must not recommend for further specific procedure. So now this is how you are going to write it. This is how you are going to write it. You state the name of the audit firm, that is Apex Tutor Nigeria Limited or Apex Tutor Nigeria Limited. You now write from Oluwabukola Suleyat, which is audit manager, to Olatunji Idris, which is engagement partner, as the case may be, or Olatunji Idris, the audit manager, to Suleyat, which is the engagement partner. So you now write, you are done with that addresses like that. So that one will tell the examiner that, oh, this report is what is internal memo. So you now write subject of key audit findings. That is what we want to talk about, Abi. Subject of key audit findings. They've already itemized it for us here. So we are going to pick it and we put it in a table. We have what? Key findings, and what? The assessment of what? Of the implication. Because the question is asking us for what? If you check the question, it's asking us for what? The question says what? Assess and report the implication of what? Of key audit findings for the what? Completion of the audit. So you just said that assessment of implication of key audit finding for the completion of the audit. That one is going to be on the other side. This idea is going to be the what? The key audit findings. Please, do you understand the way I just itemize it now before I proceed, so that we can state it one after the other? Do you understand now? Let me check the class again. Please, do we understand? Can I proceed, please?
Yes, you can proceed, sir.
Okay, so now number one, they said when you read through, they said the revenue has been stable. You know, in this question, they're actually talking about this company has 3 subsidiaries, Abi. They now said that one of the subsidiary, the company has been making well, the subsidiary has been going well. Now that our audit firm is the one that audit the component unit. That is, we are the one auditing the what? The component unit, that is the 3 subsidiary, and make it group financial statements, right? So now said one of the subsidiaries, one of them, which is Cosmic Company Limited, witnessed 25% decrease in what? In revenue. That's our key audit findings. So what is the assessment of the implication? So what do we need to do as the auditor? So this one will be a general question, this thing to ask ourselves. Now, we realize that one of the subsidiary, that they just have 25 decrease in revenue. So what do we need to do? What do we need to do? So the
We
first
need
thing
to
now,
check the records of their revenue, like their receipt.
so the first thing now is to check the record of their what? Of their revenue, if they have not understood their revenue, or they have not even underbilled their what? Their supplier. So as because there are 2 things there. It's either they have underbilled their supplier, that is making them not to have enough revenue. Please, you said what? I said if you have a question. I said if you have a question, please always raise up your hand. As I'm talking like that, I will not know where I am. You just make me forget everything I'm saying. So number one now is that they said the revenue of one of the subsidiary, which is Cospring Company Limited, witness decrease, 25% decrease in what? In their revenue. So what is the implication there? So the implication means that for this company to have a decrease in their revenue, it means it's either they have understated their what? Their revenue, or they have what? Or they have underbilled their what? Their vendors, so as to what? To have decrease in their what? In their turnover or revenue in the financial year. So with that, you have substantiated that and you are good to go. Mrs. Oluwatosin, you raise up your hand. Please, any question?
Yes, sir. Good evening, sir.
Good evening.
So, reference to the notion that you're treating, can we also say that the decrease in revenue is also as a result of increase in cost of sales? Maybe after making a finding, maybe it could be as a result of increase in their cost of
Okay.
sales.
Yes, you can say that. But do you know that the cost of sales is yes? Okay. How can it be decreasing cost of sales? You are correct. How can it be decreasing cost of sales?
No, I said increase in cost of sales. You know,
Increase in cost of
when
sales.
yes, when there's increase in cost of sales, it might reduce our profit.
It might reduce
Or
the
is it not
profit, which is the
something?
revenue. Revenue
Yes.
is different from profit, though. Revenue is different from profit, though. You can say revenue as the principal income that comes into the company before you now less other tax. It is when you remove tax, that is when it become profit.
Okay.
Madam Tosin, do you understand now? Revenue is
Yes,
the money that comes in as income to the company.
Total aggregate.
Eh?
I said the total money that comes in, both the
Yes.
cost and profit, everything.
Yes, that is revenue that comes in. They now notice that there is 25% decrease in profit and in revenue. What could be the cause? Is either they have understated their revenue. It's either that the revenue has been understated, or the invoice they raise. You know, when you want to sell something now in an advance in PIE, meaning of PIE is public interest entity. So as we are public interest entity, when we want to sell something to our vendors or our supplier or our customer will raise an invoice. Maybe that total product is 20 million, for example. You now mistakenly raise an invoice of 50 million. You know the customer is going to pay 15 million. You know you have underbilled the customer by 5 million, Abi. So this the assessment of audit now is telling us that the key finding is that they said the revenue of the company has decreased by 25%. So what is now the assessment of the implication? That is, we have to check the record of Cope Minks Company Limited on whether they have not what understood their invoice to their customer, or they underbill their customer. That is the thing that can cause the company to have decrease of 25% in their revenue. So you cannot say increase in cost of sales, because we are not talking about profit here. We are actually talking about revenue. Please, do you understand now? Do you understand the way I presented that and that question number one, and that Roman figure one rather? Please, can I proceed? If you have any question here, please, you can signify so that I can quickly attend to you before I go. Okay, so Mr. Ifanyo, is it Mr. Ifanyo or Mrs. Ifanyo? You raise up, Mr. Charles. You raise up your hand. Any question, please?
Yes, sir. Yes, is as regards this Roman figure one. Please, sir,
Okay.
can we also say the decrease in revenue could be as a result of decline in sales? Like, does it make sense, sir?
Decline in sales. Okay. Yeah. So if you say that, you know, as an auditor, you need, as a professional accountant, they used to say all answers are correct. So far, you can substantially what defend it and make it meaningful. Yes, decrease in sales, Abi. So how does it affect revenue? So if you can substantiate that, we are good to go. So please.
Okay, sir.
Oh yeah, I'm listening to you now.
Okay. So let's say they didn't make enough sales. Probably the way they used to make sales in the previous years, they didn't do enough marketing and the likes, you know, to get more sales. That's the angle I'm looking at it from, sir.
See, can you see that you are practically correct, because you are able to substantiate your position on that situation, and which is correct. It might be due to low sales during the financial year. That is what caused decrease in revenue over the year. You can say whether the company has. Oh, please, let's mute our mic. Whether the company, first of all, underbid their customers or their vendors, or they probably under invoice or under statements of their invoice. They know their invoice very well, where they're supposed to raise 20 million, for example, on that product, they now raise 15 million. So it's going to accumulate if they continue like that and lead to decrease in their revenue. So that's that. You can say due to decrease in sales. You can say due to decrease in sales of a company item. You can say due to understatement of company invoices, or due to underbilling of company customer. That might cause the reason why they witness 25% in revenue. You know what we are saying now. The question specifically told us that we must not recommend the solution. You know, this what we say. What we said now is what can cause that 25% decrease. We did not provide solution. So I'm not providing solution. I'm only telling my senior or the audit manager that this is the reason why they have 25% decrease in their revenue. So then the question says that we must not provide further recommendation for this regard. So we are not giving them recommendation. If you are giving them a recommendation, we will have said that the company should ensure that they invoice their products to their customer properly. That is one of the recommendations. But the question says that we must not provide recommendation in this regard. So that's that about number one. So any other question, Mr. Kayode, please. I will just answer three other person. Mr. Tosin, then Mr. Kayode and Peace. So, Mr. Kayode, please, your question, please, quickly. Mr. Kayode is not there. So, Oluwatosin, please, your
Hello,
question.
sir. I'm there. I'm there, sir.
Once I call you, please, you have to be fast about it. Time has gone.
Okay,
Oh, yeah,
sorry.
thank you. Please, let's go.
Yeah, my own is just contribution. We might say that they looking at their source document, they can see that there are increase in return inward that brought about the reduction in sales revenue.
Exactly. That's one of the this thing. So the more you can substantiate your answer. Thank you so much. So which other person, Mr. Oluwatosin? I don't know whether you are a man or a woman. So that's why I don't even know.
I'm a woman.
Okay, please let's go.
Yeah. So still of that figure one, I don't know. Like now, can we say it could be as a result of loss in client? That's one, or loss of major customer. That's one. Then
Yes.
second, can we also say that the company is not meeting up to customers' requirements?
That is fall in demand, or maybe due
Yes,
to the taste. Fall in demand due to taste of customer. If they see that
yes.
your product has changed over the years, that we are not even getting enough satisfaction, we can tend to move to another product. That is one of the things that can cause decrease in revenue of the customer. But that one can practically link to profit. You know, when company is not making profit, they tend to now check generally, why is this company not making profit? But in this situation, why is enough money is not coming into the company? It's not the case that why is the company not making profit? So all those contexts you are stating, you are actually moving to profit. You have deviated from that revenue they ask us. Like I said, revenue is different from profit. Revenue is the money that enter into the company before any expenses. That is revenue. It is when you now less your cost of sales and your administrative expenses and your tax. That is when it's now become whether you have profit or loss. Madam Tosin, do you understand that one now?
I'm a kind of lost, but because I don't know from my own point of view, what I'm seeing is
I said
not
you are
meeting up.
correct. Oh, listen, you are correct. But that aspect, you are moving to profit. You have deviated from revenue. They said, and that's why I now try to explain the difference between revenue and profit. Revenue is this income from sales of goods. That's revenue to you. That is, you sold something, they give you money. It's revenue to you. It's not a profit yet until you now less your cost of sales, your expenses, your administrative expenses, your tax. So whatever that remains that now succeed everything, you now determine whether it is profit. So if in this case they said they have 25% decrease in profit, it is safe to say that due to taste in due to fall in demand of customer, that is why the company is not making profit. But here, they are talking about revenue. You are correct, but you are not talking in aspect of this revenue. You're actually talking in aspect of profit generally. And profit is arrived after removing expenses from what? From the revenue. Do you understand now, ma?
Yes, sir.
You are very, very correct, but you have deviated from revenue because revenue is what comes in to the company, not profit. Do you understand now, ma?
Yes,
So,
sir, I get it.
okay. So, Mr. Habib, last person I will ask, please. Your question, sir.
Okay, more is not. Good evening, sir.
Good evening.
Fine, I joined the class late, but I think I'm following. At the same time, this question, I think I wrote the exam and actually I failed. And I'm saying the reason why I failed right away as a moment. And more so, I think the question does not really specify the line item of revenue. So
Yes.
in terms of giving our response, let us be restricted to the way you have answered it, possibly maybe understatement of some line item of the revenue, or that could cause this decrease. So I
or
think
due to understatement of invoices.
understatement of invoices. I think
Yes.
that is a good one rather than
Yes.
going into details because we're not
So
provide whether there is sales or there
yes,
is
because
so
most of the responses that we are even giving in this class, we are correct, but we are actually moving it so far because we are extending it to profit, and this question categorically stated that decrease in what, in revenue. So thank you for that contribution, Mr. Habib. I'm grateful. Thank you. So Mr. Olawale, last person, please. Any question? You raise up your hand. Okay, it's not there. FZ.
Good evening, sir.
Good evening. Good evening.
Yes, sir. Yes, another factor that I can see that can decrease revenue is the loss of customer to competitors. It can well bring that the revenue.
That one can lead to profit, not actually revenue.
Okay.
Yes, that one can lead to profit. It is when they are not buying. It is when they are not buying, then, and you have many expenses to sort out, then you have loss, or you are not giving proper, your profit is not enough. That is where you can now safe to say that. But you are correct. I'm not saying you are wrong, but this question subjected us to revenue only. So that's not about that. So let's move on to Roma figure 2. They said the operating expenses figure for the year ended June 30, 2022 is showing profits on property disposal of 2 million. Our evidence, this question said our evidence, that is, it has moved from the risk. The first one is talking about risk. Now, our evidence include agreeing the cash receipts to the bank statement and sales documentation. We have confirmed the property has been removed from non-current asset register. However, the audit junior noted that the reviewing of this sales document, that there is an option to repurchase the property in 5 years' time, but did not disclose the matter with the management. So, what will be our assessment implication on this? So now, normally, you said that the audit sees that there is option to buy the asset back in the next 5 years. So the best thing is there's need to discuss with the management if the option will result in loan, and if it is loan, they should do loan financing and understand the interest, and that is it about that. This is what they need to do. Now, I'm not recommending, this is not a recommendation. They said this is the implication. That is, they find out that the asset is going to be purchased, but assets that have been sold and is not in the movement register again. But when the auditors is now reviewing, it now sees that the sales document, in that sales document that they used to sell the items out, there's option of buying back. So now, if they want to buy back, you need to understand that are they using loan to buy the asset back, or they are using their retained earning. If they are using loan, they should also know that they should also understand the interest they are going to pay on the loan. So that is that about that. I'll say it again. Here, this aspect is telling us that they sold an item of 2 million and they have removed it from the asset register. But the audit junior now find out that asset, that on the sales document, there's option of buying back in the listing, but did not disclose the matter with the management. First of all, you need to discuss the matter with the management, and make sure you find out that this asset you want to buy back, do you want to use your retained earning, or you want to use loan to buy it? If you want to use loan, you should also consider the interest on the loan. That is that. You have already assessed the implication of that, and you move on. Is there any other question on that before I proceed? I'm sure this one is well explanatory, right? Please let me see your favorite emoji so that I can proceed, please. This class is dull, people are we tired? I should be complaining, but I'm not complaining. So let's proceed. We still have a long way to go. Let's proceed. The third one says that property valuation gain of 800,000 in the income statement relate to evaluation of property at the group head office. The audit team has not obtained evidence on the revaluation as the gain was immaterial. So what should we do? What should we do? They said there is property valuation gain of 800,000 in the income statement relate to evaluation of property, but the audit team has not what obtained audit evidence on the revaluation gain, and the gain is immaterial. That is, it does not affect the material. Okay, Mr. Moses, because of you, I will quickly explain that number 2 back. Number 2, it says that the company disposed an asset. The company disposed an asset for 2 million naira, and the asset has been removed from the company asset register. That is, they don't have the asset again. But in the sales document, that is the document they provided to the customer, that you want to buy our goods. Okay, we do paper for you. Like you want to buy car or house now, we do paper for you that, okay, this is the paperwork of this asset you want to buy. Okay, like a receipt that anywhere they ask you that this is my paperwork for this asset. So they sold the asset for 2 million naira now, and the asset has been removed from the company asset register. But in the sales document, they specify a clause there that this asset will be repurchased back in the next 5 years' time. But they did not discuss this matter with the management of the company. So now you, as the audit evidence, they say you should, as the audit, you should highlight the implication of this. So you need to, first of all, discuss the situation with the management that this asset was has been disposed of, but it was stated in the sales document that this asset is going to be repurchased back in the next 5 years. Now, as the case may be now, do you want to use the company return to buy the assets, or you want to use loan? If you are using loan, you should also consider the interest on the loan. You are not recommending to them, you are telling them that they should also put the implication of the loan they want to collect, that they must pay interest on the loan. Now, that is just the interpretation and the implication of that number 2. Mr. Moses, I hope you understand now. Yes. Can I proceed? Yes. Do we understand? Yes. Okay. So number 3, they said property valuation gain of 800,000 naira in the income statement relate to evaluation of property at the group office. The audit team has not obtained evidence on the evaluation as the gain is immaterial. So now, what is the implication of this now? There is a evaluation gain of 800,000 naira in the income statement, which relates to evaluation of property at the group head office. That is, it is the group head office that will evaluate the asset, and they made gain of 800,000 naira. Now, you as the audit team now, you now ask for audit evidence. You've not gotten the audit evidence, even though you know that this amount is immaterial on the financial statement. So what do you need to do? So that is the property evaluation. What do you need to do? So you need to obtain audit evidence and appropriate audit evidence on the evaluation, since the transaction is considered to be what? To be immaterial. Since the transaction is considered to be material, rather, before it was immaterial. The material level we said before was 900,000, but now we have reduced it to 650. It means that we just need to get that audit evidence, since that 800,000 naira now is not material. Is not material, and which has to be likely risk of material what? Misstatement. I will say it again. The revaluation gain is 800,000 naira. The initial materiality set was 900, but due to complex of the transaction, due to materiality and the complex of the transaction, which the audit team assume that there may be material misstatement on many of these things that we did not check, because it has gone beyond our materiality level. There is a need for us to reverse our materiality to 650. And now, before, this amount 800 was immaterial because our materiality was 900,000. But now, after the review that we reduce our materiality to 650, and we ask them to give us the audit evidence for this. So you just tell them the implication that there is a need for us as the company, there's a need for us as the auditors to get the audit evidence for the evaluation of this property, because it is now what material, which there is any likely for material misstatement. You are done with that, you are good to go. So we move on to the next one. Is there any question about that before I proceed? Please, do you understand the way I'm trying to substantiate this in one after the other? I know
Yes,
we spent a lot of time,
yes, we
and
understand.
majorly we'll be treating this question number one, because that's the heart of the question. So if time permits, I'm trying to liaise with Mr. Kabiru that the next class should be on Saturday in the morning, or as the case may be, so that we can have enough time to explain this thing very well. Like I said, in this class, we don't even need all this thing. We need to just tell ourselves this is how to interpret the question, and this is standard way to answer the question. So with that, you'll be able to factor everything in. And I want to believe everybody is going to pass. Like I used to say, people that know me, that I don't want to see your face next diet. It's not because you are not fine, or you are not beautiful, but I don't just want to see your face because you are passing this paper and you are going. I don't just want to see you again in this class. The next class I want to see is, or maybe you just message me, please, I want to say thank you because I passed my paper. That is the next thing I want to hear from you, and so shall it be. So let's proceed, please. Do you understand this number 3 the way I explain it before I proceed, please? If you don't understand, please raise up your hand so that I can quickly explain for the last time and we'll move on.
Yes, sir.
Mr.
Carry on.
Olawale, you've been raising up your hand since morning. Please, can you please put down your hand? Because I don't know whether you have question to ask or not. Please, let's put down our hand. So, Mr. FZ, please, let's hear you quickly before I proceed. Mr. F said, are you there, or I should move on? Okay, Mrs. Oluwatosin.
Please, will you explain that 3?
Number 3, property evaluation. This is it. Now, they said there is property evaluation gain of 800,000 naira in the income statement related to the evaluation of property at the group head office. The audit team has not obtained audit evidence on the evaluation as the gain was immaterial. That is, they are talking about the initial materiality we set, because the materiality is 900,000 naira, and by that it means that any transaction below 900,000 naira will not pick as audit evidence, but 900,000 naira and above will pick as audit evidence. That was our initial materiality that we set. But now, because of complexity and due to many misstatements on the financial statement that we find out, we now decide that we will reduce our materiality to 650. So now, and there is evaluation gain of 800,000 naira that we need audit evidence for. So it is now safe to say that the auditor must require for that evidence of this evaluation of property of 800,000 naira as our audit evidence, because it is below materiality. It is material now, abi, not below the materiality. It is above the materiality now, because our new materiality is 650, and we want to present an audit evidence of 800. So the auditors will definitely request for that audit evidence of that 800,000 naira property evaluation gain, because it is now material, and there is likely material misstatement on the financial statement. That is why we are requesting for what? For the audit evidence of that 800,000 naira to check, so as to determine whether the account is of true and fair view or not. Do you understand that part now, Mrs. Tosin?
Very well, sir. Thank you.
Thank you. So let's proceed. So that's that about okay, Mrs. Elizabeth, you just raise up your hand. Please, let's quickly answer so that we can proceed. Oh yeah, please talk.
Hello, sir. Sir, can we
Go on, go
now
on.
can we refer this 800,000 to be performance materiality.
Performance materiality is 650. Yes, yes. You can find this one as performance materiality. Yes, definitely. Yes, performance materiality, definitely. But if you remember, I said materiality, performance materiality is what? Is materiality lower than the threshold. What is the threshold now? It's now 650. So you cannot call this one performance materiality. Let me now explain the meaning of performance materiality in real life. Let's assume that this 800,000 naira, for example, is this 800,000 naira. There are about 5 items that are made up of that. There are about 5 property they value to give them this gain of 800,000 naira. So your performance materiality will now tell you that from this 800,000 naira, I must still choose anything I'm going to pick. Okay, let me quickly show you one audit work for this. Let me quickly open it. I'm not supposed to open my work for you, but for us to understand this thing very well. Let me see. Paper. Are you seeing my screen? Please, are you seeing my screen?
Yes, we can see.
Yes.
Okay. Okay. Cost of sales.
I'm not seeing your screen. Oh.
Maybe it's your network. Oh, people are saying they are seeing my screen. So it's your network. Okay, so sectional memo. Let me see. Okay. I have to close this. It's not this one I'm looking for. Where is business day? Business day. Okay. Business day. Try balance. Please, are you seeing my screen? Oh, can you see this screen now?
Your
Can you
screen
see
is
this page?
showing.
Can you see
Yes,
it now?
that's the previous screen that is there.
You said
Your
what?
previous screen
It's
there
the
still.
previous screen that is showing.
Previous screen.
That's the one for the notes. The
Okay.
notes that we're dealing with.
Let me stop sharing and I will share again so that you see what I'm showing. Where is it? Where is it? Okay. So can you see this? Can you see this screen now?
Yes, sir.
Okay. So please, for disclaimer, it is my work. So I don't. What I'm saying, can you see materiality here? Can you see materiality of 3,323,000?
No, sir.
Yes.
Yes, sir.
Yes.
I
Yes,
said
sir.
cannot see
Yes,
anything
sir. We
now.
can. Yes, sir.
Can you see? This is my materiality. This one is telling me that in my transaction that I want to check, any transaction 3 million, 3.3 and above, I will check. So anything below 3.3, I will not check as audit evidence. That is my materiality. Now, my performance materiality, it's telling me that I must get 80% of materiality. That is everything that I want to get, I want to check. If I add everything together, it must make up of 80% of this 3.3 that I check. That is my performance materiality. That in real life, let me say the total amount is 3 million, but it is not one transaction that made up of that 3 million, maybe about 10 transactions. So it is not safe for me to check the whole 10 because the account that they use 1 year to prepare, I just come within 2 weeks that I want to check the accuracy of the account. Can I check it? It's not possible because auditors are not human. But in as much as possible, performance materiality that since we said is 3.3 above, so in that 3.3 that I want to check, we must check 80% performance materiality. That is from that 3.3 million. The 80% of 3.3 million is this thing you are seeing. That's 2,659,039 naira. That is for that 3.3 that I want to check, I must check 80% as my performance materiality for me to make sure for me to ascertain that that transaction I'm checking for that 3.3 million is of true and fair view, and it is free from material misstatement. That is aspect of performance materiality. Let me stop sharing so that you will not implicate me that is my work I'm showing you. So, okay, I can now go back to our question. Where is it? Where is our question? Okay. Please, do you understand the way I explained that materiality now, that concept? Please, do you understand now?
Yes, sir.
Yeah.
So, these people, they are still raising up their hand again now. Mrs. Ifeoluwa, any question again? Please, if you don't have any question, please put down your hand. Please put down your hand in this class. Mr. Olawale, please put down your hand. Okay, so let's proceed. That's the aspect of performance materiality. I hope I've answered your question for whoever that asked the question. So let's proceed. We have spent a lot of time here, and it's almost time already. So number 4 is number 4. They said also the actual losses on defined benefit plan is 1.1 million are attributed to what? Unexpected stock market crash. Now, the group pension plan is managed by what? By Axia Company. So, a firm of independent fund manager who maintain the necessary accounting record relating to the plan. Axia Company has supplied written representation as to the value, defined benefit plan, assets, and liabilities of June 30, 2022. No other audit work has been performed other than agreeing the amount reported in the financial statement to the supporting documentation of Asia Limited, Asia Company. So what they're asking us here that there is a actual loss attributed to what? Stock market crash. So now, what is the risk that involved in this thing now? What is the risk that involved in this thing now? I'm asking now, nobody is saying again. What is the risk now on this aspect? Hello, can anybody hear me?
We can hear you,
Yes, we
sir.
can
Yes,
hear
sir.
you.
We can hear you,
Nobody is
sir.
talking now. Am I talking to myself? We are together in this class now. We should be responding. So now, what are we going to say now? Because he said there's actual losses attributed to expected stock market crash. So what is the implication, or what is the audit evidence that we're supposed to ask for if there's no audit risk now? In this aspect, there's no audit risk, but there must be something that we need to substantiate that this loss, is it actually happened or not? So what are we going to request for as our audit evidence?
We can request for a
Management.
letter from the company that is managing the pension plan.
That's
Or we
what. Yes, just letter of representation, right?
Yes, sir.
Representation letter from the company that is managing the pension plan, stating that there is a unexpected market crash in the in the market that result into 1.1 million what 1.1
Actuarial
million
loss.
uh,
Actuarial
loss.
loss.
Yes, 1.1 million actual loss in the benefit plan of the staff. So what we do now is just as audit evidence, just request for what? For letter of representation from the actuarial company. Do you know the people they call actuarial? They are the certified company, registered certified company that they deal with actuary of pension, the gratuity of staff. So if doing audit now, a company is giving pension, is giving gratuity to his staff, we'll ask, we will not just ask for everything they've computed. Though. The audit evidence will ask that, give us the actuarial letter or valuation letter that this gratuity is done by a professional actuary. That is the audit evidence we want to ask, because you cannot just come that this is the amount we are paying for as gratuity to our staff. Who is the professional that certified for you? So meaning that you can just carry 10 million and give person as gratuity. There must be a certified actuary that certified that amount for you to pay that staff. So that's why they said we will request for what? For letter of what? Of representation from the what? From the actuary company to attestify that there's actually 1.1 million loss due to stock market crash. So the answer to this one is just to obtain a letter of representation from the actuary company stating that there is 1.1 million loss due to crash in the stock market. Please, do we understand that one before I proceed? Please, do we understand? Okay, so let's move on to the next one. The next one now, which is number 5. Number 5. They said, now the goodwill of 5,350,000 related to subsidiary in the group. Management has confirmed in writing that goodwill is stated correctly, and our other audit procedure was arithmetically checked that impairment review conducted by the management. They said that goodwill related to subsidiary in the group, that the management confirmed in writing that the goodwill is stated correctly, and our own other audit procedure arithmetically check that there is impairment review on the what? Impairment review conducted by the management. So what are we going to do now? In this case, what is the possible solution, or what is the possible audit evidence that we'll ask for, or what's the risk implication of this?
Most likely, the goodwill has been overstated since the arithmetic check that there's an impairment review conducted.
This is what we are going to do. Normally, in this situation now, we have group now, 3 group. They just said that, and okay, they just said that goodwill of 5,350 relate to the subsidiaries. That is, the subsidiaries added together. This is their goodwill. Do you understand what they are saying there? That the goodwill of the subsidiary together is 5,350,000. So now, as an audit evidence, first of all, we need to differentiate the goodwill of each subsidiaries. We need to differentiate or recognize the goodwill of each subsidiary in each cases, and impair them separately. So audit evidence is just to recognize the subsidiaries goodwill separately, and perform impairment test on them, and if there's perform impairment test of them on them, and also do audit journal, to recognize the impairment of goodwill, and that's all. You are not giving them this thing. You are actually saying that what is the audit evidence you ask for if you see that there is a documentation that they need to present, or if there's probably the risk associated with that thing that they are not doing well. So you also state it. But now they said that the goodwill of the company, the 3 goodwill were combined together, and the company said that the goodwill is stated correctly. So as an auditor, we need to impair goodwill. So how do we impair goodwill now? We need to know the goodwill of the company that is not doing the company. We need to know goodwill of each company. So that is why we need to separate or determine or recognize the goodwill of each subsidiary and also impair them separately. So then also we now pass journal to recognize the impairment of each the impairment on the goodwill of each subsidiary. That is what we need to do as an auditor. We are not providing recommendation to the management. We are only saying what we are going to do as an auditor to substantiate our audit evidence on the goodwill impairment. Please, any question on this too before I proceed? Please, if you have a question, please raise your hand up. Let's see so that I can proceed. Hello, any question? Have I been talking to myself? Are we tired?
Well, with you, sir. No, sir.
No, sir,
There's
you
no
can
question.
proceed, sir.
Okay,
It
so
was
Mr.
well
Olawale,
explained.
Mr. Olawale, so you are here. I said, please put down your hand. You are still raising your hand up since morning. I thought you have a
No, I
question.
have done that. I don't know. I've put down my
Your hand
hand, so I
is
don't
still
know.
raised up. And you and your wife, Mrs. Elizabeth, now. Maybe I will marry two of you together. It's two of you that is raising your hands up in my class.
No, I don't know. I've tried to put it down. I can unmute, so I don't know. Like I've
Okay,
tried to put it down. So
noted.
I
I now
guess it's
understand.
my
I
so
understand now.
sorry.
Please, do we understand that one
Okay,
now?
sir.
Do we understand that concept before I proceed? Mrs.
Yes,
Elizabeth
sir,
has
we do, sir. Yes, sir.
okay. Can I proceed? So let's go to number 6. Number 6 now. Number 6 says that there is an investment in associate company of 4,230,000, which is 30% holding in family company limited, purchased to provide investment income. Now, the audit team has not obtained evidence regarding the associate as there is no movement in the account recognized in the statement of financial provision as at the end of the year. They are telling us that there is investment in associate. There is investment in associate of 30% holding in family PLC. That is the parent company has 30% holding in its associate. That is investment in associate. So what is the and they said that the purchase provide investment income, that the audit has not obtained evidence regarding the associate, as there is no movement in the account recognized in the statement of financial position as at the year end. So in this situation, what is the audit evidence that auditor needs to do? So who can help us out on that? Any suggestion?
Hello, sir.
Any contribution? Yes,
Hello.
Mr. Emmanuel, please go on.
Yes, I think from my own understanding, if you look at that area, first of all, that figure there, 4,230,000, comparing with the materiality threshold, is of significance. And so I think there is need for us to obtain sufficient and appropriate evidence, even if there's no movement, but we still need to confirm that that figure is that there's no material misstatement in that figure, because the figure itself is of material to the entire
Thank you
financial
for your
statement.
contribution. Very valid point. Well articulated. Yes, very valid. Well articulated. Yes, any other this thing? Mrs. Oluwatosin, let's hear you.
Okay, sir. So do we also need to make a confirmation from the management where as in the meeting is it meeting note where it was discussed that for the purchase of the investments?
Yes, it is safe to do that, but actually I think one of the audit evidence you can do is to find out that 30% for that amount, they said the investment of 4,230,000 is equal to 30%. Let us find out that 30% is actually 30%. That if it is not more than 30% or less than 30%, but they just present it as 30% investment in associate. So we need to check as an auditor to substantiate that if they are actually holding that amount of percentage in in their associates or not. Do you understand what I'm saying? We need to
Yeah.
check, first of all, if they have up to that 30% of that investment in associate. First of all, then we'll now request for additional audit evidence, especially because it is what? It is material. So we need to check additional audit evidence after we must have determined that whether the transaction, whether the investment is associate is actually 30% or not. Another thing audit evidence auditor needs to do is to request for additional audit evidence that pertain to what? Pertain to this investment in associate, to determine that whether the financial statement is not properly misstated, whether they are not even hiding something under that. So we need to request for additional audit evidence. That is one of this thing we need to do to substantiate our position that this 30% is actually 30%, and there's another audit evidence, or there's audit supporting document to show for it that they actually have investment in associate of 4,320,000 naira, resulting to 30% holding. Do you understand that one? Any other, Mrs. Blessing, you've raising up your hair. Madam Ibukun, I will ask you a question. Now, Mrs. Blessing, any question?
Sir? Yes, sir. Is that that goodwill of 5.3 you said?
So
We
we
are
should go back
supposed
to
to
goodwill
divide
again,
it.
Madam Blessing. Now,
No,
why now?
sorry,
Why?
sorry, sir. No, it's not why. I raised up my hand immediately. Oh, it's just that you didn't pick me up. It was
Okay. Oh
when you
yeah.
were there
Oh
that
yeah.
I.
Now I'll pick you up now. I'll pick you up now. Oh yeah. Let me hear you.
So I said, are we going to divide it according to each of the subsidiary? Because I hear you say that we have to divide
Safely
it.
now. Safely now.
Eh?
They said. So since we don't know the basis of their holding in the subsidiary, Abi, we know we need
Yes.
to know the holding now. But since they said they have three, so it is safe to just divide it by three now. To now, so that
Okay,
you
okay.
know, just as simple as that.
Okay.
Okay.
Thank you.
Thank you, ma. Yes, ma. So, Mrs. Ibukun Abi, yes, I said I'm going to call you before. Madam Blessing, you can put down your hand, ma. Mrs. Ibukun has run away again. So F said.
No, I didn't want, sir. I wanted to, when you asked about our understanding of that investment in associates, I just wanted to
Okay.
contribute to the
Oh yeah,
fact that
now that's what I
the
love. Now
amount that
I
they are
love
dising,
contributors.
the amount, the percentage of holding 30% compared to the 4 million. Personally, I feel like it is much. We should jack up the auditors skepticism as to check if truly the 30% substitutes for that 4 million plus, and if
Exactly.
truly there is a holding in family company limited. That was just what I wanted to contribute.
So you are saying it is safe to say that there must be an appropriate procedure to find out by the auditor that this 4,230,000 naira, does it actually result to 30% holding in family company limited? That's one of the procedure we need to put in place. Then we should also substantiate. And request for additional audit evidence to find out that this 30% is it actually real or not. What are the supporting documents to make sure to back up the investment in associate of this 30 million? If they said it's 30 million, it is fine. We are not arguing with them. Auditor, we are not going to argue with them. If they say it is A like this, now give me the supporting document that will show me that this is actually A. Abi, am I right? For those of us that are auditors here that were on the field, if you go for field and you request for their GL, they said that their GL maybe for revenue now, the total GL is 5 million. Okay, give me invoices that you raise that will give me 5 million, that will represent 5 million in your bank statement. Is that what I will ask them? If they said it's 10 million, give me invoice that will substantiate this 10 million in the bank statement. But where they now said it's 10 million, and they are now, when they said 10 million, when I now check and I saw 11 million, that is where I'm going to raise an alarm. So if you said it's 10 million, fine. But give me additional supportive documents that will make me to believe that this 10 million is actually 10 million. That is what I'm in for. So now, first of all, based on your decision, we need to substantiate that this 30%, is it all, can it be commensurate to that 4.230 million, first of all? And they should also give us additional supporting documents that will substantiate that amount to what they reported to us in the financial statement. Are we good to go on that? Are we good to go on that?
Good to go, sir.
Okay, so Mr. FZ, finally, let's hear you before we proceed. Because you raise up your hand too. Okay, let's proceed. Let's go to question number 7. They said non-current asset held for sales. Non-current asset held for sales. So I just call your name now and you not respond to us on time. Please hear your question. Let me hear you. Oh yeah, your question now. Maybe you can drop your question in the chat box because we can't hear you now. You can drop your question in the chat box, sir, because we can't hear you now. Okay, so let's proceed. They said non-current assets held for sales of 7.8 million in the draft financial statement. In the draft financial statement, what they call draft financial statement is the account that have not been signed, that's still subjected to further changes or further adjustments. That's what they call draft. It is when it is now final, they will now call final or signed financial statement. So let's proceed now. They said the draft financial, okay, let me move to that distance so that I can see very well. The said non-current asset held for sales of 7.8 million in the draft financial statement relate to trading division of one of the subsidiaries, which represents 1/3 of that subsidiary net asset. The sales of the distribution was announced in May 2022 and is expected to be completed by December 2022. So the audit evidence obtained include a review of sales agreement and confirmation from buyer obtained in July 2022, which indicate that sales will take place. They reported in the financial statement that the sales take place in May 2022, and it is expected to complete in December. That is, from May to December is how many months? That's about 9 months or 8 months. May, June, July, August, September, October, November, December. 8 months. They now find out that the sales agreement, and from confirmation, auditors, for those of us that are working in an audit firm and you're on the field and you know that you are doing proper audit, for this thing you need to ask for confirmation. We call it bank circularization. We do it for payables and receivable, that is for debtors and creditors. So we send bank circularization that for the creditors, amount the company is owing you, how much is it? Because the company might say that you are the company might say that, oh, Mr. A is owing us, the company might say that we are owing Mr. A 40 million and actually you are owing Mr. A 30 million, but because you want to understate your payables, no, in that case now you want to overstate your payables now so that you will not pay more. So maybe you are owing the person 30 million. You now said, and when we now confirm from the person now said that you are owing him 40 million, as the case may be, then that is on payables. Then on receivables, that is the people that is owing you, your debtors, the people that is owing you how much, because you cannot say they are owing you 50 million and actually the people is owing you 40 million. So we do bank circularization to confirm the money, the actual amount for the company vendors, both payables and receivable. That is the company, the people that is owning the company and the people that the company is owning. So yeah, they said non-current asset held for sales was 7.8 in the draft account. And after this now, they said the division was announced in May 2022 and it's expected to to take place in December 2020, to completed in December 2022. But they now find that during the audit evidence and review that the sales agreement and confirmation from buyer obtained in 2022, July 2022, indicated that sales will take place in July 2022. So what's the implication on this aspect now? What's the implication on this aspect? What's the implication on this aspect? Oh,
Well, it means that the items, the non-current asset that have been classified as held for sale is actually right being classified as such, since there's a confirmation from the buyer that the sale will actually take place.
the sales will take place in July, but it was stated that it was held for sales in May 2022 and it is going to complete in December, meaning that they're supposed to start in May, they now started in what? In June. So meaning that the money the company is going to pay at the long run is going to increase by some amount. It's going to increase by some amount now. It's supposed to start in May. They now they obtain in July that the sale will take place in July, not in May again. And they've estimated that this is the money they are going to pay between May to December 2022, which is 7.8. That is held for sales in the draft account. But now you now find out from your confirmation that it's going to take place in July 2022, not May again. So what is going to be there that what so non-current held for sales here, it was going to be amount to, is going to like increase like 33% increase in the amount stated before. So if in this regard, that is going to be 30% increase to the amount stated in the net asset of the subsidiary. You know, they said held for sales in the draft account of one of the subsidiaries. That is, they are going to it was held for sales. Is that not IS 40 or so? Investment property now.
Yeah, I think he's talking about IFRS 5.
Okay.
Is
Is there any
non-current
is
asset held for
there
sale and discontinued operation.
okay, so they said it was held for sales. It was held for sales by one of the subsidiaries for 7.8 and it's supposed to start in 2022 May and it's expected to completed in 2020 in December. So if they did not start in that May and they started in June and the thing must complete in December because December same year, because it is actually going, the accounts run from January to December that same year. So they are going to incur more, 33% increase more in that amount, in that 7.8. You know, they're supposed to start in May, but by the time they start in June and they must complete it in December, and by the time they start in July and they must complete it in December, it means that they will also incur 33% increase in the amount they're supposed to pay so that they can complete the project by December 2022. That is what the aspect is saying. That so in this situation now, there is tendency of percentage increase in the amount of net assets of the subsidiary. So it is very, very important as an auditor to ask for additional audit evidence to make sure that it aligns with what they reported in the draft account as regards to what you confirm from the customer. So in that situation, you request for additional audit evidence. Since you find out that they said they will start in May 2022 and they actually started in July 2022, which is going to be additional cost implication for them if they still want to add the asset for sales. Do you understand my points there? Or maybe I'm just talking to myself. Please, do you understand on that aspect?
Yes, sir. Yes, sir.
Madam Tower, please, your question, please. Oh yeah, ask. Okay, Mr. What's your name again? I cannot pronounce this name. Please ask your question, Mr. Teng, or I don't know, Mr. Morris. Okay, Mr. Morris.
Okay, good evening, sir.
Good evening.
So I want to ask a question on the last point, because from that last point, I'm thinking that it was the audit evidence that was obtained in July, and not that they say was going to take place in July.
No, the audit it was during our audit evidence when we obtained the audit. At least I ask you that you said you did this thing now, and the draft financial statement is showing that it's happening in May. So according to my audit evidence, the thing now shows that it is in July. Then I now confirm from the customer, at least from the confirmation from the buyer, the person that want to buy the assets, and the person confirmed to me that the thing actually happened in July, and in draft financial statement it was stated in May. That's the difference there. Do you understand now, Mr. Morris?
It's
They
all right,
said
sir.
press agreement and confirmation from the buyer. That is why I explained the aspect of bank circularization. Auditors use that one. Apart from that, is that sample, will send it to the client, that the client should put the address of their vendors there. It is the clients that will now send it to their vendors, but we'll put in the letter that the vendor should send the amount, the confirmation, straight to auditor's email, not the company. So the company will not have any information as regards to what the vendor is sending back to us. Do you understand what I'm saying, sir?
Yes, thank
So
you.
in that regard now, it is only me, the auditor, that can confirm, that can check what the buyer confirmed to me. The company will not be involved again, because I want to actually use to check if the company is saying the truth or not. That is why the company will not know again. So in this situation, it's supposed to, the item was held for sales, and it was announced that it's going to commence in May 2022 and completed in December 2022. But from my audit evidence and my confirmation from the buyer, it actually shows that the transaction actually took place in July 2022, which eventually is going to run to December 2022, meaning that they have short out 2 months they're supposed to use. So